Welcome to Pinoy NZ.
Hello and welcome to Pinoy's and NZ. I am Christine.
And this is Mel. I am your founder of Pinoy NZ. We have been serving the community for more than 10 years. We have been working hard and now providing services for our Filipino community in New Zealand. So our mission in the group is
Helping Filipinos prosper faster in New Zealand. And as we all know, migrating to a new country is not easy.
Sumali kami sa Pinoy NZ Business Group. Siyempre, una-una to promote our business, yung mga services namin para sa mga retail customers namin and commercial clients, but also to collaborate with other like-minded people within the Filipino community, lalo na lumalaki yung grupo natin dito sa New Zealand.
So as you know, guys, one of our mission in Pinoy NZ is to help you prosper faster in New Zealand. And we want to share something that we enjoy, like this, our daily necessities, and we actually educate.
So we were just looking for products, actually using the products we were introduced, especially started with skincare. It was so difficult to start because of the price. It was expensive. But with this one, when we found this, was so affordable, but effective. So when we started using it, we saw improvement of our skin, and then realized there's lots of products that we can use, and at the same time, we have noticed and realized as well that you can actually earn with it.
Hello guys, ako pala si Jean Weba. So I'm an Atomy member since 2 years now, and I enjoy using the product, and then it become my passion and become my business as well.
Mel, what would be your priority? For me in New Zealand, it's really important that we look after our health because we work hard, right? Like most of us here, we come here to work, to get a job. So
as a nurse, we know the importance of health
definitely,
because it will affect all your areas of your life.
once you lose your health, and that's why one of my favorite things.
Oh, I thought it's the rice. Rice is life. But before that, Christine takes this Himohim.
This is my favorite thing, guys, because I see a lot of people who are taking energy drink because we're working hard, we're tired. And this Himohim, this is the number one product of Atomy, and it's my favorite product. Because Atomy, for me, is a low risk and high potential business model, and 90% of the work is done for us.
So I saw the post of Christine on the Filipino group, and it really motivates me and give me the courage to
Do it. I know.
do it. And here I am.
Don't find a way to earn while you're sleeping, you will be working all your life. So this is why I joined Atomy. For passive income.
Yeah, for passive income.
For passive plus income. 3-generation wealth. You can pass it. This is a legacy that you can leave behind.
All right. Hello. Thank you so much. And again, welcome and good evening, everyone. Kumusta mga kababayan natin sa New Zealand? Hello, Ate Dane, and hello, Febby.
Hello, Apple, and of course, hello, Fabby. Thank you so much for being here with us, and we're so excited for this first Home in NZ topic live webinar in our community. Yes, yes, Apple. We are really
Yes.
yeah, and then of course we want to know where are you joining us from? Tama ba, Apple?
Yes, nasaan kayo ngayon? Are you from Auckland? Are you viewing this at Christchurch, at Wellington? Just drop it in the comment section, diba, Ate Dane? And yes, and of course, guys, type first home if you are still renting and dreaming of owning your own place. Because let's be honest, diba, Peb? Most of us Filipinos, owning a home isn't just a goal. It's security, it's stability, it's yung para sa pamilya, 'di ba? So ganyan parati ang mindset nating mga Pilipino. But then we hear this phrases na kailangan mo ng 20% deposit, 'di ba? And then suddenly that dream feels so far, 'di ba? Kasi nga kailangan pa ng 20% deposit. So tonight, we are going to clarify, do you really need 20% or is it just a common assumption? So, guys, now we are very, very excited to introduce our guest for tonight. She has helped many first home buyers understand the real numbers, not just what they hear from friends. And yeah, so please, guys, let's help me welcome Neet Diman. Yes. Hi, Neet.
Hi,
Hello.
how are you?
Yeah,
Hello,
yeah,
yes,
so fine. Yeah, so very thank you so much for being with us tonight and being with our Pinoy community. So now you can actually start sharing how we can do this, how to buy your very first home with less than
yeah.
20% deposit. Yes, we're so
Wow, that's
excited to hear it.
Thank you so much for having me today, first of all. And
Yeah.
yes, that's absolutely true that you do not actually need, as a first home buyer, you do not actually need a 20% deposit to buy your first home. There are so many options where you can actually buy with 5% or 10%, and lots of other options where you can use lots of different ways to get your deposit accumulated. So, this is what we are going to discuss today. Can we start with the slides?
Yes, let's start with the slides. Many Filipinos are so excited. Eh kasi nga naman, di ba, most of them really think that they need 20% deposit first to have their own home
Hmm.
in New Zealand. So let's crack that myth.
Firstly,
Yes.
welcome everyone. I am so thankful for everyone who is attending us today. And let's dive into the various options and the different ways we can work out, and how I can help you as a mortgage advisor to get onto your first home. So the topic that we're going to deal, as we said, 20% deposit, is it really needed or no? So
Yeah.
why do we really need a 20% deposit? Because, with the current economy and with all the different expenses that we have throughout. Can you see my screen? First of all, sorry, can you see my screen?
Yes. He
Okay.
can see you.
Yes,
Okay.
yes.
Okay. So I've just wanted to check if the screen's all right. So, lots of our Filipinos, first home buyers, it's hard to accumulate 20% deposit. And when we talk about 20% deposit, it means more than 100K, even for a 700K house, for example, it's like 140K as a deposit. Who has this kind of a money sitting there? Not really, not many people. So that is why we are here today to discuss um, what are the options and how a smaller deposit can help you buy your first home, as well as if there are any government supports who can help the first home buyers. So, as we know, in New Zealand, the deposit requirements are either $5, 5%, 10%, or 20%. That's the range that we can buy a property for. The
Yeah.
can
So excuse me, Nit, are you changing your
I am.
slides?
Yes, I am. Oh,
Okay, so what we can see now is the first page of your slide.
Oh, okay. So hold on a sec. Just a sec, all right?
Yeah, that's okay.
I
So
thought you
guys, while Neet is preparing her presentation, please do comment and ihanda nyo na yung mga questions ninyo for the last part of this webinar. We're gonna handle some Q&A.
can you see my screen now?
Yes, okay.
Sorry about that. So I just discussed this already with 5%, 10%, and 20% deposit. With 5% deposit, we have this option called Kayangora First Home Loans, and there is only one bank who does 5% deposit. And most of the banks, other than that, they have an option to get your first home with 10% deposit. And other than that, lots of other banks or each one of lender should be able to let you buy a property with 20%. So that's we all know. Now we are going to indulge more into why Kayangawara First Home Loans and why there is one more lender who can help us with 5% and 10%. So let's get more into details with that. Kayangawara First Home Loans, this is a government scheme that is provided by the government for the first home buyers only. So that is very important. If you already have a second home, then you cannot use this scheme. So as per this scheme, if you only have a 5% deposit, just an example, if you are looking to buy a 700K property, as a 5%, you need $35,000. If you have that $35,000, and we'll talk about this in different ways, how, but if you have this $35,000, you should be able to buy a 700K property. For this Kayangawara First Home Loan, which is, as I said, only available for first home people and only for owner occupied, it means you have to stay in that property. And this loan, this particular product is available only through certain lenders. It means not all the banks are providing the loans for Kayangawara, only a certain, which is around 5 or 6 main banks. That includes ASB, we have just started, Kiwi Bank, Westpac, SBS, and a few other Unity money lenders, non-bank lenders as well. So it means it is limited for those particular lenders. However, anyone who is either their existing customer or their new first home, a new customer should be able to apply for this loan. Then this is, as I said, has to be taken permission by Kayangawara as well. So Kayangawara is a third party who also gives you some eligibility criteria to meet, and then we can go to the bank to apply for the lending. Let's talk a little bit in detail about Kayangawara First Home Loans. They do have an eligibility criteria. So you have to be a New Zealand citizen or a resident to be able to use this scheme. You have to be a first home buyer. It is not available for an investment property or for another property if you're looking to buy second one. So only as a first home buyer, you have to stay in that house. And the most important, they do have an income cap. What this means is if you are going to buy a house with just an individual, just on your own, then you have to have a maximum salary of 95,000 or less a year. But if you are buying as a couple, then if combined salary is 150,000, you will meet one of the criteria for KO loans, Kayangawara loans. But as I said, for this salary, you just need 5% deposit, not more than that. And the third option that you have to be really careful, and that is not sometimes most commonly discussed, is you have to be in your job for at least 12 months. Because the income that is calculated as 95,000 or 150,000 has to be the gross income from the last 12 months. It means you need to be in that particular job for 12 months, or in the same career for at least 2 years. So this means if you have recently changed your job, you will not be eligible for KO loans. You have to wait for a few more months to get at least the last 12 months. Any questions on this one? Anything you want to clarify? No? Okay.
Yeah, and so yeah.
So for Kiwi Saver, sorry, would you like to ask something? Is there anything?
No, no, no. Proceed, Neet. Sorry.
Okay. For Kiwi Saver withdrawal, so that is another option that you can do. First, for 5% deposit, we have to work out how can we get that 5% deposit accumulated. One of the very, very important and the easiest way to get your deposit collected is through Kiwi Savers. So if you are a Kiwi Saver contributor from the last 3 years, you can withdraw most of your Kiwi Saver, leaving $1,000 there. So for example, if you have been contributing 3% from last 3 years or more than 3 years, you can use all of that money whatsoever there, you and your partner, both. So if I'm talking again about 700,000 property where you need 5% as 35,000 deposit, and if you have 20,000 in your account and 15,000 in your wife's or your partner's account, you already have the deposit ready to buy a 700K property. Isn't it cool? However, the important thing that you have to keep in mind is when you are looking for a property, make sure you are eligible to get your Kiwi Saver out. Get a letter from your Kiwi Saver provider how much you are eligible to use. It is very important because sometimes people are not too sure about it. Okay, so get a letter from your provider, know your deposit, know how much you already have sitting there to be used by you to use it as a deposit for your first home.
Yeah, yeah. Amit, a follow-up question. You mentioned after 3 years of contribution, right? So does that mean continuous contribution? What if
Yes,
someone had a break? Right, right.
has
Yeah,
to
yeah.
be an active contribution. There could be a little bit of gap of few months for maternity or things like that, but then it
Mm.
all falls down on the Kiwi Saver provider if they are happy to release the money for you.
All right, all right. Yeah. So
But
let's
most
proceed.
of the time, as long as it
Yeah, yeah.
is active 3 years.
Okay.
Then, as sorry, then as we said, for the deposit options, now you have your Kiwi Saver, which you can deduct after 3 years of continuous contribution. Your personal savings, if you have any personal savings, it can be anything like $5,000, $10,000, anything to start with. And then the third option to get that 5% deposit sorted, and here we are talking about like for a 700K property, 35,000, right? So the third option could be getting a gift from the family. So these are the three ways you can get your minimum $35,000 collected through that. One important thing that you have to keep in mind here is if you are getting a gift from the family, it should be a gift, not a debt. Okay, a gift means something that you are not going to return. It is they have given it for yourself. It can be your family, your mom, dad, sibling, anyone is helping you to buy or get into your first home. There is most of the times there is a declaration that needs to be signed by them that this is a gift for that particular client.
Yeah.
So, this is another thing that you have to think about when we are talking about buying your first property. It's not just the deposit. So, be mindful, there are more costs associated with it. So, as a mortgage advisor, when we are talking to our clients, we make sure that we are not using the whole last penny sitting in the account. We need to save some money aside so that we have planned for the legal costs. We have planned for the reports that you have to order, may it be building report, may it be the limb report when you are getting into a property. ladder. And then you have insurance as well. You have to just keep some money aside for your moving costs as well. So very important that you have some money left over. So again, if it is 35,000, you have got to deposit, you have got the gift from the family, you're using all of your Kiwi Saver, but is there anything left there, or you have used up all? We aim to have at least a few $1,000s sitting in your account, so you are not just putting yourself in a negative position straight away after buying the house. It's very important to think about this stuff too. When we are talking about low deposit, which means a 5% deposit or a 10% deposit, anything less than 20% deposit, it does come up with some lending risks. It means the banks, they are assessing you a little bit tighter than the low risk clients, which are the 20% deposit clients. It is very important that you know about these things beforehand when we are looking at these 5% and 10% options. So the main risk is you might end up paying higher interest rates. There are a few lenders who have special interest rates for first home buyers. And if we are buying a property through Kayonga or our loans, then you do get special interest rates. But if we are going to any other lenders, you do end up paying a little bit of extra, sometimes 0.25 to sometimes 0.75% extra. Okay, it's not a lot, but is still a little bit extra, which is only until you reach the 20% deposit equity. Okay, it's not a permanent thing. It is just a temporary situation to get you into the first home. So as I said, banks do charge for low equity margins, which can go from the range of 0.25 to 0.75. And they do sometimes assess you a little bit tighter, which means that they will look very closely at how much debt you have. If it is a lot of debt, then we do encourage our clients to reduce the debt first. May it be your car loans, may it be afterpay or things like that. So we do encourage reduce your debt before getting into more debt, because you are anyways getting more debt from the bank. However, with all this, with right planning and with our support, we are more than happy to work out how this can be minimized. Any risks that comes with buying and getting more lending, we can work it out depending on your situation. All right. And we have already discussed this, that because being a less deposit client, you are a high risk candidate for the client, for the bank. So there are lots of ways where we can make our chances better, because any debt you have is seen as an additional debt to the new debt we are going to get. So there are ways, we need to work on them. And if you feel you're not ready today, but we have these things already in place, like credit card debts or car loans or things in place, we can start working on those reducing debt strategies today, so that in 6 months' times you are ready to buy the property. So reducing the debt, if you have credit card for like $10,000, we can reduce it to 2,000, 3,000, depending on the need. What happens, sometimes we notice that people just keep increasing their limits, whether using or not, but they feel that we have a limit of $10,000, which is fine, but it sometimes affect your application negatively. So these are the things that we can work. And making sure that the deposit that we are showing, if you are showing your savings as your deposits, they are consistent. Banks do not like a big amount of random money coming to your account. They ask why and where is it coming from. So if you are thinking about buying today and you think that within 6 months, start saving now. Start saving a few $100s at least in a week, in a month, whatever you can. There's no minimum or maximum, but at least there is consistent saving.
Yeah, yeah. Yeah, Neat, can I ask, when you say consistent savings, how many months should someone show good money habits for that?
So banks normally ask for 3 months bank statements. This is
Mm-hmm.
where you have to clean up and tidy up everything, really, but more the merrier. Because in 3 months, um, with minimum savings, you might not be able to achieve the amount of savings we want. So we do ask clients to at least start thinking about it 6 months ahead. But for the banks, they normally ask for 3 months bank statement where you have to, they would like to see that consistent savings coming up.
Yeah,
And
all right. So does that also mean that transferring money to family overseas affect the assessment?
they do,
Yeah.
yes. If there will
All right.
be a random big amount came from anywhere and it is not a gift, then banks will ask for an explanation for that.
Yeah.
Okay.
All right.
There are ways to mitigate them, there are ways to explain things which we can do because they need to see where the money is coming from. So, yeah. Um, a stable employment is a really, really green flag for the banks. For those clients, for those people who are looking to buy a first home, try not to change your jobs too quickly because that can come up as a big risk why this client is changing jobs so continuously. A stable employment makes it a strong application. And if possible, we do ask the clients to get a pre approval. However, not all lenders and not all banks are open for pre approvals at all times. They always keep changing. Sometimes they open it for their own clients, sometimes they open it for new clients. So these things keep changing. So, as advisors, we are always on top of this one who is open for a pre approval, who's not, and things like that. And since we have talked about a pre approval, my next slide is actually just talking a little bit about what's pre approval. And sometimes this word comes across live deal quite often. Live deal. So I thought actually just let's talk a little bit about what is that and how they are different from each other, just to give it a bit of an explanation around it. Pre-approval is basically means you getting assessed by the bank beforehand. We haven't found a property yet. We don't know which house we are going to look for, but we send the application beforehand and try to get you the maximum lending we can based on your income, your expenses, your debts, and things like that. So this is a good option for those people who are not sure what's the range, kind of range I want to get a property in, or for those people who want to, have that budget in hand beforehand before trying to get a property. So banks give you a conditional pre-approval, and that condition is based on the kind of property you're looking for, their how's the building is like, whether they will accept that property or not as a security. So there are conditions attached to pre-approval, but you know that this is, for example, you will know that I can buy a property, I can get a loan for 670, for example 670K, and then you can add your deposit to it, which can be either 5% or 10%. Then you know that I can buy a property for 750, for example. On the other hand, if it is a live deal means, in this case, we have not sent your application to the bank yet. You liked a property, you loved a property, you have put the offer in, and your offer has got accepted, and you got a signed sales and purchase agreement with you. Now, with that in hand, with having a property in hand that we know, we are then going to send the that all that documentation together with your application. There are risks in this one, a little bit more risks because you were not assessed by the bank beforehand. However, when you are working with a mortgage advisor, the mortgage advisors assess your application beforehand and only send it to the bank or that particular bank where we know that you have strong chances of getting it approved, because then we do not want anybody to get into a position where you love the property and then do not end up getting the lending from the bank. So we have to be really careful in these kind of things, whether you would like a pre-approval for yourself or you would want to go live deal. Having said that, banks keep changing their policies around these as well. As I mentioned before, they sometimes open themselves for pre-approvals, and sometimes, or most of the times, they are open for live deals. It's just a little bit more risky for them, or less risky for them, because they know that this is the amount of money we are going to lend to the clients. Are we on same page for this one so far?
Yes, yes.
Okay, awesome. Just moving forward, just thought what is a step-by-step buying process when you're looking to buy a house? First and foremost, you have to make sure that you have enough deposit, whether it is going to be a 5% deposit or a 10% deposit. You need to make sure that you have that money sitting in your account. Even if you, and this is a recent change as well from some lenders, even if you are expecting a gift from your parents or anyone, that money they have now starting to ask that it should be sitting in your account, even if it is a gifted money. Not all lenders, but a few lenders have now started to ask this beforehand. Check your budget, because as a budget, you should be able to have a bit of a buffer. If, for example, if you are buying a house and you have to pay, say, $1,200, no, I'm saying it high, at around at least $900 weekly installments or repayments that you have to pay, do you have that $900 sitting after all your expenses? So that's where you have to make sure that you are getting assessed by someone or a mortgage advisor beforehand, whether is it a right amount to work for, or shall we wait, or shall we reduce our property price. So there are ways to work around it. Okay, so that is why you should be able, just find a person who should be able to assess that for you. If possible, get a pre-approval for the bank. If not, get an assessment and we can go live. Then the next step, if you have a pre-approval, the next step is to start looking for the property, because the pre-approvals are not valid forever. They do expire sometimes within 60 to 90 days. Depends on different lenders. Sometimes the lenders can increase and do the extension on those pre-approvals, and sometimes they ask to get the whole assessment done again after those 60 days. So again, it varies from lender to lender. And then once everything is done, you like a property, you've put an offer there, you have the offer's been accepted, the next step is to make sure that your finance is approved, your insurance is covered, because banks will definitely ask for that property to be insured, and then the settlement, where everything is checked by a solicitor. Moving on. Before indulging yourself into a property, it is very important that you make sure you're not doing any sort of mistakes that can affect your application. First, as we mentioned, keep some buffer. So we are not going to use all of the money straight away for buying a house, and we are not left with any buffer. So very important to keep some money aside, to keep some buffer for your additional expenses. Sometimes people, they feel that it is a new property, we don't have to get a building inspection done. Do not do this mistake, because once the property is bought, and all issues that can come with it are now your problem. And we would not want that for a first home buyer, because getting into a first home as a first home buyer, there's anyways lots and lots of things, and overwhelming, everything comes along with it. So that's where you have to make sure that you are getting assistance from people who can guide you the right way. So getting your inspections done is one of that, so that there are not any costly surprises that come your way later on. And we also discussed this one, making sure that you are not changing your job too much. And if you are, try to stay in your same career so that there is a stability of your employment, and as well as you're not taking any more debt. Just recently, one of the applications, and I got to know that there was a client who had a pre-approval, and then without discussing anyone, they ended up getting a car loan, which was big enough for the bank to say no to that pre-approval. So we would not want anything like that to happen when you have already done most of the hard work. So make sure no more additional debts if you are in the process. Sometimes life happens, right? There are things which might not make you a really strong client for the banks. So, and those situations could be your bad credit, or it could be some high debts, or it could be something that, self-employed income, or for example some commission income. So things like that which are a bit out of the box. For those clients, we have this option of non-bank lenders. So non-bank lenders is basically the private lenders which are not banks. Okay. They do charge extra and some additional interest rate. The interest rates are always higher, but the main thing is they have more risk taking capabilities. So if you are wanting to buy a house and you know that in few months time, this is my temporary situation, and in few months time I will be able to sort out my finances, I'll be able to, I did some mistake in my credit and it is now showing a bit of a problem for the banks, because banks are going to straight away, they will check a credit report and they're going to say no straight away. In those cases, we have this option which is always open. This is, always remember, nobody stays with a non-bank lender for whole of their life. It is just a temporary solution to get you on the property ladder. And in a year's time, on 2 years' time, when we are back on track again, we can go back to the bank. So for those options, for those people who think that it is really tricky because of so and so reason, no, we have these options available as well, which can be discussed depending on your personal circumstances. Now, just a little bit about myself, how a mortgage advisor can help you with all of this information, because knowing, as a person who is already working full time, it's totally understandable that it is really tricky to get on top of all of this information by yourself. So, as a mortgage advisor, we know what's happening in the market. We know all the changes that's happening before the interest rate changes, or on that day. We do get emails and all that information from the banks. So that is why we are always on top of this. And that's what makes it really easier for you to deal with one person rather than dealing with all the different banks. So as a mortgage advisor, we will work for you, not for the bank. And we are not going to work with just one bank. We have the capacity to work with all the banks which are available in New Zealand, and the non-bank lenders. So depending on your situation, we can work out which bank can be feasible for you. And then again, as I mentioned before, it is not just the numbers, not just the income. We have to make sure that there is buffer. We have to make sure that you have enough money left to do your regular grocery shopping and additional expenses related to your kids and stuff. We make sure that we are comparing and finding the best option for you. The role of mortgage advisor does not stop once you are in the house. Actually, the role starts after that. How to pay off the loan quickly, how to use these schemes and help you and guide you through it, as well as helping you save your interest when it is coming to that situation. The help, as a mortgage advisor, we help you from the pre-approval through to the settlement, and of course, later on, with every year, we advise you for how much you can fix it for, try to get you the best rates possible, and things like that. And the most important thing, we do not charge anything. Our services are free because we get paid by the bank. Whichever bank we will go to, they pay us for the services provided. And that is the end of my session. And I hope that you have got enough information for you to guide you through your path for the first home, and you should achieve some more information today. I'm happy to answer any question that you have.
Wow, thank you so much for that, Neet. So yes, guys, keep your questions coming in. So before that, Neet, how many banks or lenders do you usually compare when assessing a client situation?
So again, it depends. Firstly, how many banks are they actually able to get in? Because each lender have their own criterias. Sometimes the banks are only taking their own clients and not taking new clients. So in those cases, we sometimes end up with the banks that the clients are already working with. And if there are an option where the clients are actually the banks are actually able to take new clients, we can then add that assessment to the bank as well. So it again depends where we are sitting. And with 5 to 10% deposit, sometimes the options are normally only 2 to 3 banks.
Yeah. So yeah, thank
Yeah.
you. And then we have someone in the comment section, one of our admins, Melody Alpanas. She asked, is there any minimum years being a resident in New Zealand?
No, actually, no. As soon
Oh,
as
wow.
you become the resident, you are eligible to buy a house. I just had
Wow,
a
that's
client recently um,
mhm.
whose application just approved when we were doing the assessment. And by the time we were sending the application through, we had their resident visa got on their passports. So it was like literally the
Wow,
next day.
that's
Yeah.
great. Yeah, lucky for him or her. Yeah,
Yes.
congratulations. So, guys, if you're already, just on the verge or in the process of getting your resident visa, might as well book some consultation with a mortgage advisor because you never know, right? Yeah.
Yeah, because
So,
assessment takes a little bit of time to, when we are getting assessed, to get yourself ready. So, yeah, so maybe we just get the assessment before, and the moment you get the residency, boom.
yeah, true. So, another
Yeah.
follow up question, how about cashbacks?
Yes. So for the first home buyers, the bank, they offer $5,000 as cashback. Clients and not taking new clients. Yes. If oh, sorry, I'm just, so if it is and it's 5 and 10% deposit. If it is under 20%, over 20%, there are percentages of it, but for first home buyers under 20%, it's $5,000.
Yeah, all right. So thank you so much for that. And we have another question. Okay. If I get pre-approved, does that guarantee a live deal will go through, or are there additional steps I should take to strengthen my application before making an offer?
That is a really good question. And in one of my slides, we did discuss this. Pre approval is your conditional pre approval. There are most of the times a few conditions attached to it. We have to fulfill those conditions. And then, if the assessor is happy with those conditions to be met, that's when the live deal can go approved. After the pre approval, when it gets live, it will get approved. To strengthen your application, make sure you're not taking any more debts. You are, if we have mentioned that we are going to close the credit card, for example, you do not start using the credit card again. So things like that, a small mistake sometimes. Try not to overdo any payments, because bank sometimes can ask for the statements again, and if there is anything in the bank statements which is not normal to what it was before, it can affect our application.
Yeah, thank you so much for that. And another in the comment section, shout out to Jim Boy Lee. You can he stated that you can be in a safe position signing an agreement without a pre-approval as long as you put in a finance condition. Yeah.
That is right. Yes, yes, that is a very good of information. Yes, and we should always do that. Always and always, whenever you are signing a sales and purchase agreement, make sure that you are doing your due diligence. And due diligence means putting a finance condition, putting a building report, and putting any other changes that can happen, which is a full due diligence for yourself. So yes, that is a really good information. Thank you, Jim Boy. We should definitely do
Yeah.
that.
Yeah. Thank you so much for your interaction. And another question. I am exploring a non-bank lenders as an option. So can you explain how their approval criteria, interest rates, and flexibility typically compare to traditional banks?
Yes, yes, definitely. Non-bank lenders are definitely more risk takers. And depending upon which non-bank lender you're working with, they have different criterias, because each non-bank lender also checks your assessment. They assesses you and and check where you are sitting, how much risk can be taken. Okay, so it is a good thing that you are exploring that lender, but I would like to ask, have you actually checked the banks first before exploring that non-bank lender? Because their interest rates will definitely be higher. You will be paying higher interest rates. The good thing is, most of the times they do not have clawback fees, which means you can pay off your loan quicker and then move to a traditional bank whenever you're ready or whenever the situation gets better.
Yeah. Yeah, so thank you so much for that. Another follow-up question from Melody Opanas. She said, the years of being a resident for the KO, the Kiangara.
For
Yeah.
Kayango alone, you can. I have to double check this information though. But as far as I know, as long as you are a resident, I don't think there is still a requirement, but I'll double check. It is, no, I'll double check it with you. Would you mind holding on just 1 second? Okay.
Yeah, sure. Yeah, sure. Yes. So thank you so much, Neet.
No, yes, I'll
Yes, and
double check
again, guys.
and I'll put it in the comments. I don't think they have
Yeah.
any requirement for being a resident, but as long as you are a resident, they are happy with that, because they do have criteria where you are a resident, but I'll double check it for you. Yeah, there's no criteria for how long you have to be a resident.
Yeah, so thank you so much. And again, shout out to Jimboy Lee. He said good presentation. Thank you so much. So again, guys, if you still have questions and clarifications regarding on what Neet had presented, and of course, this is a there we have a free consultation. It is on the comment section. This is just free. Just book a consultation with Neet, and of course you can watch the replay of this webinar if you want to go back and have some clarity, and then yeah, just ask some questions and we will still be there to clarify it with you. Okay. Yes, another comment from Jim Boy Lee. He said, just make sure non-bank lender is solvent as they tend as they tend to have less funding than banks, so risk is higher if you rely on them to provide funds on settlement. Yeah, thank you so much for that, Chimboy. Yeah.
Yes, they do
So
have less. That's a good information. Again, they do have less fundings, but also they have active funders who are available most of the times within New Zealand or within around Australia as well. So that is why they take the risk higher. However, most of the times non-bank lenders are happy to provide you pre-assessment and a pre-approval. And another thing for non-bank lenders is that they're really quick in their response. So within a few days, you actually get the response, and so you know where you are sitting with non-bank lenders.
Yeah, all right. So thank you so much, Neet. What a wonderful tonight it is. So do you have any other additional information or additional claims that you want to say, Neet?
I was just wanted to say that all the situations are different. No two situations and scenarios are same. The information that's provided here is just a journal information for the clients. However, your personal situation can be very different from what your neighbors is or your friends is. So do not hesitate to approach to someone to get your full financial assessment done. And also do not think that if this person has got this, why haven't I, or how come I? Because as I said, all the situations are different. So it's important to cater to your personal circumstances and work around it and get yourself ready to buy your first home.
Yeah, so thank you so much for that, Neet. And again, guys, you can book a free consultation with Neet. It is in our comment section. So mga kababayan, kapag mayroon pa kayong mga pahabol na questions, you can message us on our Facebook page, Property Ventures in NZ and Pinoy's in NZ Marketing and Info Services. So yeah, see you soon, Neet. So we will be having more webinar with Neet in the next months, I think. So, yeah. So, comment nyo na rin sa comment section, guys, if there is some topic that you want us to dive in. Yeah. So, you can actually comment it also. And I think that's it for tonight, Neet. Thank you so much, and everyone. Have a
Thank you.
very good evening.
Thank you, Neet. God
Okay.
bless.
Thank you.
Yeah, so I'll just play.
All that, nag-meet ng fellow Filipino business owners kasi kailangan nating magtulungan.
And yes, you won't be left out with events and other collaborations.
Benefits, a lot of benefits in joining this team because I got a lot of customers, especially posting online, and customers will know more about your products.
Think of us as your own creative support team, so we can present or help you present your business in a more creative way through promotional products and branded merchandise.
My first goal here to come in New Zealand was just to work and, experience living abroad and working as a nurse here. And I didn't know it was possible, and that could be a goal of mine.